Punch and Profit. We are going to break down yesterday's session and look at all these possible plays you could have taken part of. If you want to see one of my live executions, I think it was on this leg for about $1,200. You can look in the description below. The link will be there. Like, comment down below, and subscribe if you're new. And let's get into it. Now, I don't show you all these so because you're supposed to take them, right? I'm not saying you should take each of these trades. The best thing, most efficient way of doing this would be to find one of these signals and then run it up for about 50 to 100, maybe 150 points, and when you become really good, 200, right? Or if you're like me, you can just break it down, be modest, take your 50. That's very consistent, as you see when you get these signals. And if you want to, you can sit throughout the day and just 50 points, 50 points, 50 points, 50 points, right? I think only one of the signals did not play out for 50 points. I think it was one right here. And it actually did from the inversion. You would hit your 50-point take profit, but from the advanced market structure shift, if you got in a late entry, it wouldn't have played out. But I'm going to show you a way to where you can manage your stop loss to where you didn't have to take an L, or you could have taken a partial halfway through, and you can apply that to each of these, and it'll be effective for all of these plays. But another reason why I like taking profit at 50 points is because I'm a very impatient person. My psychology works on me when I sit through long trades, and plus I got a lot of other things I deal with. I got two kids, and I also box during the day, so I don't have time to sit at the charts sometimes. But if you do, like I said, you can 50 points, 50 points, 50 points, 50. That's 200-point day right there. Okay, or more possibly. But let's break it down. Let's get into it. So, higher time frame narrative. What is going on? This blue line just represents the 9:30 opening. We come down and essentially we tap into the new week opening gap. We bounce back up right here and we tap into a bearish fair value gap on the daily time frame. And if you pay attention, look, I'm not a pattern day trader, and I know this is going to get pattern day traders' panties all wet when I show them this, but what is this? Oh my gosh, it looks like a bearish flag. Is that what it is? I don't know. I'm assuming it is, right? I think you would have put it something like that, right? There's your bearish flag. Now, obviously, if you play patterns, you probably play this break and get the retest and take this little leg right here. That's not my thing. But that doesn't mean this pattern can't help me understand the higher time frame narrative. This is kind of like this consolidating range right here, and we came down, right? We bounce up, we get a signal, we go up 450 points plus, we come back down to the range, okay, the bearish or the flag, and we get another signal, we go up, okay, we get to the extreme of the range, get another signal, come down, up, we get another signal, go up, and it starts to narrow so it can do that break and retest. All right, so it's pretty much bouncing off of higher time frame PD rays and creating this flag. So we'll get out of that. So our first signal came right here. It was pretty much during the silver bullet hour. Very tricky play though, because you had a big stop loss if you put your stop at the low. Obviously you don't want to do that, and we'll talk about that. Now, I didn't get in on this one. I did not see the inversion because I did not pay attention to the detail. I was actually trading on my phone, so it was very complicated to see these volume imbalances if you zoom in. But it was an inversion. There's a volume imbalance. There's a volume imbalance. So we'll close that. And then you have the overlap over here with the bearish fair value gap. So you got your inversion. And the reason why this was tricky, and I didn't get in on it because it was a little bit a lot. Usually my stop is close to the inversion, like you see these roughly, right? Those aren't too far, but that's not necessarily where I keep my stops. Sometimes I don't place hard stops. I like to, kind of let my trades breathe, because even if my signal isn't playing out or giving me that A plus setup, it doesn't mean that inversion can't play for a break even or a few points, like a 15-point scalp. But if you want a tight risk game, you put your stop at the end of the gap. Now here you would have been stopped out, right? Because it wicked into you. Okay, or what you can do if you want to give it a little bit more breathing room, you can put it at the end of the fair value gap. Okay, it's up to you, but in circumstances where you have this big distance between the inversion and the low or the high, lower your risk or just don't play it at all. It actually worked out in my favor that I didn't attempt to play this, but you did get the inversion, you did get the advanced market structure shift, you got the candle close over it, and it would have actually been better for you to play the advanced market structure shift, right? Because you would have taken little to no drawdown if you entered there, and you could have put your stop right here. You put it at the gap where the most recent gap, so it would have been right there after you closed over here. Little to no drawdown, right? Okay, but for just the sake of the discussion or the video, we'll make it look pretty and put the stop at the low. So you would have written it up for plus 50 points. Okay, so higher time frame narrative, you're dealing with this bearish flag where it's bouncing between a range. 2, you got your inversion. 3, you got your advanced market structure shift. 4 or 3, you got your stop. 4, you got your advanced market structure shift. 5, you got your 50 points. You come back down, you get another signal. Okay, you get the inversion in here. You can enter, or you can wait for the advanced market structure shift. You could have entered or pyramided there. Little to no drawdown. If you put your stop at the end of the gap, you would have been just fine. No wicks, right? And you got your 50 plus points. Now, on all of these, what you can do, you can put multiple contracts in. At 25 points, you take your first contract off and then let the second one run to 50 or more, right? And you always guarantee yourself a profit. And once you get to 25 points, what you can do, move your stop to break even, and you should be good. Even if it pulls back on you, all right, you don't lose any money. Same here. Once you get the advanced market structure shift and run up for 25 points, pull your stop up to the advanced market, or where the advanced market structure shift is. Break even pretty much. So you go back up here. Okay, you get another one. Inversion. If you look closely, it's there. Okay, you could enter here. Advanced market structure shift. Okay, you can add on, or it can be a late entry. You take little to no drawdown. You don't have to put your stop all the way up there. You can put it at the gap. As you see, no retracement. You go 25 points from the advanced market structure shift. You go to break even. You get your 25 points. Take a contract off, 50 points. Let it run, or take them both off. Right? Boom. Little to no drawdown this way. The only one that was a little bit tricky, and one of the reasons I think it had this wick back into this gap or over it, was because this is not like a typical fair value gap. You had the two volume imbalances, so that's probably why that one tapped into the gap or retraced back into it. Once again, we come down, inversion over here. You could have entered. You can have your stop at the low if you don't have too much leverage on. You put it at the end of the gap. Look, little to no drawdown. And if you got an entry roughly at the inversion, you did get your 50 points. but this one doesn't go beyond that from the inversion. And if you entered here at the advanced market structure shift, you wouldn't have hit in 50 points, right? But that's why I said, okay, that would have been 50. But you would have been okay if you do what I say. Okay, because if you take it from the advanced market structure shift, 25 points, you have one contract off, you move your stop up, okay, second contract doesn't run, you get break even with the second contract, but you make a little bit of profit in the process. Okay, so you come back up again, guess what? You get another entry, inversion, advanced market structure shift, you keep your stop up here, or you can bring it to the gap for a tight risk management, and boom, this one runs for plus 50 points, and that was your day right there. So let's look at the rules one more time. Higher time frame narrative, understand what it is. Okay, 2, you get your inversion, you can enter there. 3, put your stop at the low initially, let the trade breathe, and then once it starts to make its move, okay, that's when you can start managing that stop. You can move it up or keep it at the gap, and as you hit 25 points from your entry, you can go to break even. And yeah, always aim for your 50 points, be modest, and you'll see these signals multiple times a day. So this is HB with Punch and Profit. Comment down below, like the video, subscribe to the channel. God bless and peace.